Yo, what's up traders? Welcome to a new video. In this video, I will show you a powerful 1-minute scalping strategy. So yeah, let's jump into it. Alright, so now I'm looking at Euro USD, and by the way, I'm using TradingView for my analysis. And today I will show you a nice strategy that basically everybody can use. It doesn't matter if you are a beginner or more advanced. Yeah, everybody can do this. Okay, so what indicators do you need? As you can see over here, I have two exponential moving averages. I have an indicator that shows divergence, and I have another indicator that shows the momentum, and it's an oscillator. Let me show you first how to get the indicators. You go to indicators and then you look for exponential moving average. So over here I'm using this one, set of 3 by FOREX. Why? Because if you use the free plan, you can use up to 3 indicators for free. As you can see, I'm using 1, 2, 3, 4 indicators right now. So for the people that do not have a pro membership, they're not able to use this system. But if you use this one, the exponential moving average, then it basically uses 1 indicator instead of 2, right? Instead of 2 moving averages. So I use this one, exponential moving average set of 3 by FOREX. Then so you click once, then you look for a divergence indicator over here. You also click on that one, and then finally you can use the stochastic, and you also click once on this indicator over here, and that's basically what you have. Let me show you. So this is the EMA 20, 50, 100 and the 200, and what we will be using is the middle one, well the second one, which is the 50, and we have the 200 exponential moving average, right? So you basically check this. All right, and you can make it you can give it a color if you want, whatever color you like. Then we look at the divergence indicator, which is it looks like this. This is the default settings, and over here the stochastic, and I would like to change this to 533 if you are looking on a 1-minute time frame. If you're looking at the 15 minute or higher, then usually the 1433 might be better, but you can play around with this, but I prefer the 533 for this 1-minute time frame. As you can see, we have 2 exponential moving averages. This was the 200 and this was the 50, and this basically shows the trend, which direction we would like to trade. The 200 exponential moving averages shows the long-term trend, and the 50 shows the short-term trend. But we are going to look for opportunities, for sell opportunities, when the 50 crossed the 200, and then when it stays below the 200. And over here we see that the 50, the red one, is above the 200, so then we are only looking for opportunities to take buy orders, right? I hope that is clear. Then our next confirmation is a divergence. What is divergence? Divergence means that the price goes in one direction and the indicator shows the opposite direction. Let me clarify it for you. Over here we have a high point, right? So it goes a little bit down, then it goes to the upside, and over here it makes a high, right? And it drops, and then it goes to the upside, and then it makes another high. What do we see over here? We see that this is a high, but this high is lower than this high over here. But if we look at the indicator, we see that this high point is higher than this higher point, right? So again, this was a high, and over here we see that this is the level over here. Then we see another high which is lower than this high, but over here we see that this is higher than this. So it means that there is a divergence, and divergence is a really nice way to trade. So now we have two confirmations. We have the trend and we have a divergence, but now we need a way to take an entry, right? And that is by using the stochastic indicator. Okay, so as you can see over here, the stochastic is an oscillator indicator, and a lot of people use it when it's overbought or oversold, and then it comes out of the zone, and we also see a crossover here, and then they take an order. What we are going to do, we don't care about if it's overbought or oversold. We only take an entry when these lines cross, and of course all the other confirmations are valid. Oh, and before I forget it, we are only going to use hidden divergence. And you have regular, you have hidden, and you have exaggerated. And we're only going to use hidden divergence, which means that we're only going to take orders with the trend. So let me show you quickly an example of a hidden divergence trade. Over here we see that this high is lower than this high, while if we look at the divergence indicator, we see that this high level and the spike is higher than this spike over here. It's hard to see, you really have to take a closer look, but yeah, it's definitely true. This is higher than this, while this is higher than this, right? This situation shows a hidden divergence because we're only going to take the trade with the trend, because we're going to take a sell order, right? Okay, let me also show you an example of regular divergence. Over here we see a high, and we also see another high over here. Well, we also see a high level, and we see a level, a high level, but it's lower than this level, right? So yeah, we also have a divergence in this situation, but this time we're not going to take the trade with the trend, but this will be a counter trend, because the trend is upwards. We're going to the upside, but we see over here that yeah, this is a regular divergence situation. So as you can see, this divergence situation played out because yeah, it didn't go higher, it straight went to the downside, and yeah, for a long time. Okay, back to the strategy. So now we have the two exponential moving averages, which shows a downtrend. We also see over here a hidden divergence, as I explained a few minutes ago. And then we look at our third confirmation, which is the stochastic. And yeah, we basically wait for a crossover on a stochastic indicator, and when the crossover happens, which is about here, we take a sell order. So let me show you. The crossover happens about here, and what I personally do, I see a lot of people, a lot of traders that place their stop loss quite close to the candle, to the top of this candle. Yeah, as you can see in this case, you always basically 9 times out of 10 get wicked out. I always use my stop loss and put it above the previous highest point, which is about here, and then a few pips, maybe 1 or 2 pips if you're trading on the 1 minute time frame, and if you're trading on an hourly, then of course more. We're going to use a 1-to-2 risk reward ratio, so over here, yes, so we're going to risk 1% and gain 2%. So this is a nice example of a yeah, sell trade with this strategy, and as you can see, it worked out nicely. Let me show you a buy order. Okay, over here we have another example. This is a buy one. So over here we have a 50 exponential moving average, and we have the 200 exponential moving average. This 50 is above the 200, which means that we are in an uptrend. We are only looking for buy orders right now. Then over here we are looking at a low, and then we are looking at a previous low, which is about here, right? There was a low, then this made a high, then it went to the downside. So this is another low, another high, another low. So this is a low. Over here we see another low. But if we look at the indicator, we see that this low is lower than this low, while this low is higher than this low. That means that we have a divergence situation, and even though you don't see the indicator pointing this out, we still have a hidden divergence situation. You do not need to rely on this indicator, on the divergence indicator. You need to train your eyes to see hidden or regular divergence situations, right? Even though it didn't point out a divergence situation, you need to see it yourself. Yeah, we have a divergence situation over here. We are looking at the stochastic, and we see a crossover on this candle. And what do? We take a buy order, and then we're targeting a low, or yeah, you can also place it below the 200 exponential moving average. About here, there's also a low. You can also drag it a little bit down because this is also a low. And then over here we're targeting 2 times the risk. So yeah, this is a nice trade. We're risking about 2 pips and we're making 4 pips. So you really need to be quite fast in order to execute this trade. But yeah, that's why you're trading on a 1 minute. You have 1 minute to set up this trade. Yeah, according all the rules, right? So yeah, that is a nice one. You also can use yeah, like I said, the 200 exponential moving average, and then you're risking 1 pip in order to make 2 pips, which is about here. So your TP gets hit in, well, that's about in about 10 minutes, which is yeah, quite fast, of course. So that is the strategy. If you're wondering what is the win rate of the strategy, yeah, I can test it 100 times. And if you like to see that, just give this video a thumbs up, subscribe, and yeah, just check out my next video. I see you in the next one.